after the fact. So with no further ado, we're going to jump right in. The conversation today is going to focus on mixed income housing and a model that we feel really is a path, not the only path, but a potential path to greater affordability, inclusivity, and financial sustainability. But before we go there, if you can advance here, Jonathan, I think we'll give you a little bit of backstory about HomeEd. And in a lot of ways, I come to think of us as one of Edmonton's best kept secrets. I think our organization, which has been around since 1977, has done phenomenal work in the community, really in providing Edmontonians with access to quality, affordable housing. And that word quality means something to us. I think it really is with the goal of establishing a really high standard and being great stewards of the assets that we're entrusted with, and a great place to live for people. And yet, you know, at the end of the day, we are actually owned by the city of Edmonton. You know, our shareholder is the city. They are represented by mayor and council. Yeah, we have a independent governance board that really gives us more of the marching orders on a daily basis. And Jonathan and I have the privilege of working with them to try and advance not only HomeEd's goals, but the broader perspective on affordable housing in the city as outlined by our shareholder. So there's no shortage of things to do when it comes to that, but we're heavily involved in a lot of activities. You can just advance there, Jonathan. But we never try and lose sight of who it is we're trying to help. And for us, that really is low to moderate income Edmontonians who really are maybe struggling in finding some affordable housing with various degrees of income. But stability is also a big piece in that, and not having to pick up and go to someplace else every step of the way, because the people here who live with us, I think, are trying to build a life and be part of a community. And it's a big community. And we've got, at any given time, about 2,000 people that live with HomeEd. And within some recent data we've done, you know, we've got about 36% of them as children. So it's very family oriented in what we do, because we have a collection of townhomes and apartments, and gives you a sense of our average income bands, but it's a pretty broad band. And we'll talk a little bit more about that as we talk about mixed income housing in a bit. Just a quick snapshot of some additional surveying we've done recently, self-identified considerations to demographics. And so you get a bit of a sense of, you know, the diversity of folks who are living with us. And we definitely try and keep that in mind, because I think inclusion and respect are two core values that we try and bring to all that we do. You know, when we talk about the physical assets, the places where people live and put their heads at night, we've got a pretty broad collection of different residential suites within apartments, within townhomes, and then you know, selectively within larger condominium units. And we're at 975, but we got fairly ambitious intentions to grow, and a lot of stuff in the hopper, a few things that are very close to being announced that we're very excited about. But all to say at this point, you know, a pretty broad split between apartments and townhomes, which does give a lot of options for folks who are looking for different types of accommodations, be it the bachelor suite all the way up to 3 and 4 bedroom unit, very much distributed across the city. Now, one thing, you know, again, as the newbie to affordable housing, and to some degree, I come to realize affordable housing gets a bit of a catch-all for a lot of different things. And yet, those of you who've lived and breathed this for a long time, I think, certainly appreciate the different segments. You know, we use this sort of segmentation sort of within our conversations, but it may be slightly different for those of you who are in different segments. Permanent supportive housing is, you know, a really important part of the mix when it comes to the options available to Edmontonians. Community housing obviously speaks to a lot of government support and a deeper subsidization level relative to the near market affordable housing, and then market rate housing on one end of the spectrum. If you advance here, Jonathan, to the next slide, really to pinpoint where we tend to land in this mix. We do have some longstanding agreements that go with the province and the city, not unlike many of you, I'm sure, that would qualify as community housing. But the vast majority of our portfolio does land within a near market affordable housing category, really taking that CMHC 10% less of that market average as sort of the max rent level. And then we put a band on that additional 15% less to sort of help people at a varying degree of income. One thing I'll note, and it's often viewed as a surprise, something that we're giving a lot of talk to right now is in some of our properties, we don't have an income cap at this point in time. And so as we go forward, we've been thinking a lot about how do we manage that to ensure that, housing of this nature does end in folks who probably need it the most. While some of these other considerations, which we were talking about right at the start, financial sustainability, inclusivity, and affordability are all kind of taken in hand. So, as a snapshot of where we're at right now, based on sort of 2020 CMHC market rates, we're sitting across a portfolio of about 22% less than that when you average out our rental prices. On the next slide here, it really goes to our priorities. I mentioned we've got some ambitious plans with respect to growth, and really that goes to our mission of providing access to quality affordable housing. And I think, as you would all appreciate being in this sector, if you are, these are hard things to do, right? Preserving affordability and trying to ensure that we can go as deep in support for those who need it as we can. Creating spaces and places where people feel that they belong, and that we can live together with a greater sense and appreciation for the diversity that exists here in Edmonton. Financial sustainability at the end of the day is something that I think we all grapple with. How do we provide this type of housing without losing our shirts with respect to our returns and that which we hope to reinvest in the community. And again, for us, a lot of thought in terms of how we grow the stock of affordable housing in Edmonton, but a diverse mix of stock, wherein in different parts of the city, we do know that, we may be well represented with bachelors and one bedrooms, but maybe there are communities that you really can't age in place and have an opportunity to grow a family within the constraints of a community that you love. So it gives us a lot of pause to think about how we advance those types of things, and a lot of activity in that way. But the next slide really speaks to where we are going, and it underscores, I think, a need to look at things a bit differently. Our vision is better homes and brighter futures, and takes us beyond the scope of just the physical assets, thinking about our tenants and our community around us and how we advance that. But unquestionably, I think we need to push for a different blueprint. We need to be creative and work together as a sector, but also in our own right, really push the needle and try some things and see what works to really help people who need it today, and certainly create more options for people who need it tomorrow. So with that in mind, I'm going to flip it over to Jonathan, because there's some practicality in all of that we really want to address today, and then get some interviews from all of you who are listening in today. Over to you, Jonathan.
Thanks, Nick. As you know, the housing sector is facing a lot of challenges, and HomeEd is not an exception to that. Affordability has only gotten worse with the pandemic. It's harder than it's ever been for Edmontonians to find affordable housing. With respect to inclusivity, HomeEd is a big tent. We're happy to welcome all, but the realities of our property is that our stock does place some limits on who we can accommodate. For example, over a third of our tenants self-identify as having a disability, but only a handful of our nearly 1,000 units are accessible. And then there's our financial sustainability. Increased operational costs keep applying pressure to nonprofit housing providers like HomeEd. We've got to deal with now inflation, cost of borrowing increases. It's only becoming more difficult to be financially sustainable. So it would be wonderful if there was just one magical solution that we had to these challenges, but as you know, that's simply not the case. One strategy, though, that HomeEd is pursuing to meet these challenges is mixed market or mixed income housing. We're using the terms interchangeably. So we're going to discuss the rationale for why to use mixed income housing, why to use that model, and how it addresses the challenges that we identified. And we'll also share how meeting these challenges is impacting our operations as an affordable housing provider. So I want you to meet Rosaline. She's a new Canadian. She's a single mom, and she's working as a licensed practical nurse. So she makes about $44,000 a year. For a 3-bedroom townhome in Clairview, she'd have to spend about 40% of her monthly income in rent. But fortunately, she's found housing with HomeEd, and so her rent is fixed at 30% of her income, saving her about $250 per month. Her kids attend a local school, and they become part of the community fabric. And that's really why we're all here. It's to help people find housing that they otherwise might not be able to afford. But it's important to remember that affordability goes both ways. Just because someone needs affordable housing today doesn't mean that they'll always need it. So let's fast forward 3 years. Rosaline's received a raise, and now she has a long-term partner. Their household income is more than adequate to pay market rates for rent. But now for us as an affordable housing provider, we have a challenge. What do we do with Rosaline and her family? Do we continue to charge them below market rent, even though they can afford more? It doesn't seem fair to subsidize them, perhaps at the cost of another family that needs affordable housing. Do we evict them and push them away from their neighbors, away from their community, and away from their support systems? That doesn't seem like a good option either. And this is one benefit of mixed income housing. The solution is that we charge Rosaline market rent. Now, Rosaline isn't real, but her situation is. And we have many examples in our tenant community that are staying with us, even though their incomes are higher than required for affordable housing. Charging market rents is a fair and compassionate way to deal with this issue. But it does raise an important question. Doesn't keeping Rosaline in that unit reduce the amount of affordable units available? Well, it could, unless we take the extra earnings from Rosaline's market rent and then reinvest them to create more units. Eventually, when Rosaline does move on, perhaps buying her first home, her townhome will return to the stock of affordable rental units. Let's talk about Jeff. So Jeff's going back to school for retraining after a workplace accident. He's concerned about the perception of a stigma of living in social housing or affordable housing. But he is on a limited budget, and he has a difficult time finding a unit in his price range that will work for him. One of the benefits of mixed income housing is that while some tenants require subsidy, others do not. Mixed income housing builds a community of tenants regardless of their economic status. And besides any perception of stigmatization that Jeff may be concerned about, his situation highlights a real challenge with accessibility in Edmonton's rental stock. And HomeEd has the same challenge. The average age of a building in our portfolio is 41 years old. Most buildings from that era are walk-up only, even to the floors nearest the ground level. I recently visited one building from that era that has an elevator, but you have to take several stairs to get to the elevator. Retrofitting existing inventory like that to be more accessible is extremely difficult. The best solution is to create new accessible units, designing them for that purpose right from the start. But that typically requires new construction. And this is another area where mixed income housing can help us to resolve the issue. As we saw from Rosaline's situation, market rents create new reinvestment opportunities. And those reinvestment opportunities can include retrofitting units for improved accessibility or building new accessible units. One of the realities that we're all dealing with being affordable housing providers is that there's never enough money. We all have buildings like this one. It's one of the oldest in our portfolio. It has chronic water issues and high utility bills. It costs more to operate than we can earn on affordable rents. And this gets to the core of one of the challenges in the affordable housing sector. Years of not enough money, years of deferred maintenance, and now buildings that aren't financially sustainable. So what's the solution? Well, it's more money. But where do we get it? That's the question. Again, mixed income housing can be part of the solution. To be clear, it's not the only one, but it is an important part of the overall solution. Even with government funding, new construction and site redevelopment is often too expensive to justify at affordable rental rates. And mixed income housing can bridge that gap. Take this site. So its zoning supports up to 100 units. There's currently 24 on site. To be financially viable, a new development would require about 50 units to be rented at market rates, while the other 50 would be rented below market, including deep subsidy. Let's put this another way. If this site is redeveloped to its potential, it could provide 4 times more units, including twice the amount of affordable housing units in a modern, high-performance building. It would be more financially sustainable. It would also be more environmentally sustainable. But it's not only our organization that needs to be financially sustainable. We want our tenants to be as well. And that takes us full circle back to Rosaline. Mixed market housing allows us to support the transition of our tenants from needing affordable housing all the way up to being able to participate in the market. It's part of building a sustainable nonprofit business as we build a more sustainable community. But really, how do we build? How do we pay to create more affordable housing spaces? Government has an important role in funding, of course, but new construction is just so expensive. Many nonprofits are running near break even and don't have enough equity for a large development project. Others have difficult qualifying for large-scale borrowing. And even with access to funding, without internal development expertise in entitlements, expertise in construction, it's difficult to navigate those processes and get a building up and out of the ground. Nonprofits need help. They need capital, they need borrowing capacity, and they need development expertise. All of those things are readily available in private industry. Real estate investors and developers are looking for opportunities in the marketplace. And nonprofit housing providers bring some unique advantages to the table as business partners. Nonprofit organizations have access to preferred borrowing rates, capital grants, and operating grants that for-profit developers don't. Many for-profit developers do not have property management expertise. Well, that tends to be a strong skill set among nonprofit housing providers. Additionally, many investors are looking for opportunities that have positive environmental, social, and governance, ESG outcomes. Well-positioned, affordable housing developments can provide that. It can be a mutually beneficial relationship. But investor money is not free. It has to generate a reasonable return for relative to the risk and other investments that are in the marketplace. Mixed income housing is an important tool that enables that return. The positive cash flow generated by market rents can provide that return for investors. And combined with preferred borrowing and grants, overall project returns can be competitive with comparable investment opportunities. Together, nonprofit housing providers, government, and for-profit real estate investors and developers can deliver more units, create more jobs, and most importantly, walk a path to increased affordability, inclusivity, and financial stability and sustainability. But what does that mean for our operations? Nick's going to keep us going and talk about that.
Thanks, Jonathan. If you just advance to the next one, I think one thing we've been given a lot of thought to, as we have varying different agreements across varying different properties, is how do we make this as simple as possible, not only for tenants, but also internally here, as we have to wrestle with the considerations that we've been talking about all through this presentation: financial sustainability, affordability, inclusivity. And while there's a few different ways to think about this, when you start pushing down to what are the rents that we charge and how do we enable people to join this type of community in a mixed income setting, for us, we like to start around the notion of affordability. And I think generally accepted is this idea that if you're paying more than 30% of your monthly income towards your monthly rent, then you're probably not in an affordable space. Our goal has become to try and target people down to that less than or equal to 30% for income going towards rental. And yet, I think there's an opportunity for all of us as organizations to really assess, where do we want to play in this spectrum of affordable housing? I think we've given you a sample case of where we sort of stand to date. And our view is, we can offer a great deal of value operating, primarily in that near market affordable housing space, but wherein we can afford to provide deeper subsidization, by all means, let's try and do that. So this combination of market and non-market housing allows us to prospectively establish a band wherein the market rate for any given property in any given area is really the market ceiling. All right, that's what people are willing to pay, and we got different ways of assessing that. But can we then establish 30% less than market as basically our rent floor? And so that gives a pretty clear indication of where we think we can operate. And within that, you're going to have people with different incomes paying different rent levels. Simple as that. Now, the question kind of comes back is, how do you preserve sustainability financially within all of that? And knowing that certain properties, may have a higher cost structure, may have some very significant loans attached to them. And so, when push comes to shove, their net income is different. And so there is only, prospectively, some degree of subsidization or pricing less than market that we can conceivably afford to offer. And for us, we sort of see that as a range between an average of 10% down to an average of 25% below market. So you're basically managing against a band wherein this is the average for the whole rent roll that you're collecting against. And yet, wherein we have some market rate tenants, they are effectively almost cross-subsidizing for those who are provided a much deeper rent subsidy. And so, we can't separate ourselves wholly from the notion of what it takes to keep this as a healthy and viable property in the long term. And so there's got to be some flexibility that we pursue within that. So I think the key things to note is that you got to be adaptable when you think about these types of things. And to the degree that you've got properties with select rental agreements that are dictated by the province or the city, may need to adjust accordingly. And we've got a few of those, and yet we think that there is a model here that we're bringing in that supports some level of adjustment, but really comes back to that distinct simplicity of targeting 30% of income and to hold that at a band between market and less than 30% of market. So as just a quick sample before we go out to questions around some of this, if you go to the next slide, Jonathan, really you can imagine, market rental of 1,000 for a particular type of building, particular type of unit, and then 30% of that being down about $700 a month. And if we peg this as a sustainable average at 20% less than market, everyone's going to sort of fall within that. You extrapolate that out to their income level, and you can start to see, okay, upwards of $40,000 a year, you're going to be paying the market rent, and less than that, down to our rent floor, is where there's some variability on effectively a rent geared to income scenario. On the right hand side, you're getting a sense of how we could have this very broad range across the different apartment types, and townhome types, where we got 2 bedrooms up to 4 bedrooms. You're starting to see where the mins and the maxes land, and effectively, we're supporting people upwards of $20,000 a year in apartments, upwards of $32,000 a year in incomes, but giving them plenty of room to grow with us by progressing all the way up to a market rent level. So that's the concept, that we continue to think about and see how we can best apply, and knowing, again, it's not the end all be all. But if we flip to the last one here, Jonathan, I think the reality is, there's some unique benefits that I think we can derive from looking at this model, and knowing sometimes we got to be flexible within it. But clearly, the challenges are not going away, and sometimes we've got to push out of that traditional model wherein we have that flexibility, look at things a little bit differently. And for us who are heavily going down the path of growth and thinking about enhancing the affordable stock in Edmonton, this is really starting to make a lot of sense. So more to come, more to think about, but we would certainly welcome any questions that you have if you want to put that into the chat, and we'll take them as we come. The first one that I'm seeing here is, will this presentation be available after today's discussion? And yes, it will. So I think all the recordings from all these YEG Housing Month presentations are available on the YEG Housing Month website, and welcome your circulation of those. The question coming in here says, have you considered partnering with for-profit developers and operating/leasing below market rentals within a larger market housing complex? So Jonathan, you want to run with that? I think some points around that for sure.
Yeah, that's certainly one solution. Every organization is different, and to some extent, every development is a little bit different. For HomeEd, we're primarily a property management organization in the affordable housing space. So it makes sense for us to be operating the developments that we own or co-own. As far as the other part of the question, for having some units in a larger project that is a market housing project, it comes down to an operational issue. So if the only units that are being operated are, say, 2 or 3, we have condos in our portfolio that fit that category. A large condo building, 80 units, 100 units, and we have 2 or 3 of them. Operating them is very, very difficult. So that becomes the challenge with that model, at least for us. For some other organizations, it may be more viable.
Yeah, well said. So lots to consider sort of with that approach. The next question I'll go to, is there a building that exists or is being planned that uses the mixed income approach?
So yes, we're in planning right now on a development that's going to be using that approach. As Nick mentioned in the presentation, this model is something that we're looking at across our entire portfolio where it makes sense, with the express purpose of helping our tenants grow into the marketplace. We have in other municipalities, other cities around Canada and beyond, this is a very common approach. And as mentioned, with our existing condo portfolio, mixed income housing is embedded into each of those, where the other condos are market, they're bought, sold, rented at market values, and we rent ours out at affordable rates.
And I will note that our friends over at Savita, I think, are currently looking to lease up the new Londonderry complex here in Edmonton. That is a mixed market approach. So lots of movement, I would say, in this. And obviously, you know, it's sometimes hard to wrestle with things when there aren't a ton of precedents to drive off of. But the research that we're picking up from other places around the world suggests, you know, there's something definitely to explore. And like Jonathan said, we're looking at it from the view of not only new development, but also how can we prospectively apply this in to existing properties that where we have an opportunity to do so. Next question I got here is, you mentioned the ability for not-for-profits to access low-cost loans. Will these typically be CMHC, or do not-for-profits typically have access to provincial lending from Alberta Finance?
So typically in Alberta, it's through CMHC. The vast majority of the rental loans, at least with preferred rates, are through CMHC financing. And that's true of both for-profit and non-for-profit developers.
Excellent. Question on whether HomeEd has a waiting list for accessible units. And I think one thing that we're really working hard to enable is not so much a waiting list, but a notification list wherein, you know, we can be attunely aware of folks who have certain requirements, and as those units that are currently full right now come available, you know, we can certainly reach out to those folks. So that's something you can see certainly on our refreshed website. I should have probably mentioned at the beginning, you know, HomeEd's looking a little different these days. So we've had the pleasure of launching a new brand, a refreshed brand of late. And it's really just a hope of telling our story in a slightly different way. But it's starting to look a little different, and our website is certainly one of those. So welcome you to check that out at myhomeed.ca. Last couple of questions here. I'm going to go as far as we can until we run out of time. How do you attain land for new projects? Do you need land price to be near zero for financial models to work? Are you looking at all quadrants of the city to meet the city's affordable housing targets?
That's a great question. For new development, getting land can be a challenge. The city does offer subsidized land. Right now, I believe they have a listing for Ogilvie, so anyone who wants to have a look at that can go for that. Then they have some sites for permanent supportive housing. So there are opportunities to get low-cost land out there. The federal government recently ran its FLI, Federal Lands Initiative program, that was similar. In general, projects should be viable paying market rates for land. It's always better when we get them subsidized. We can just do more with that. But most projects are viable with a mixed income model, paying market rate for land where it's available. But certainly looking all over the city.
Absolutely. Question here around, rather than restricting affordable housing to intentionally built or designated affordable housing stock, including mixed income housing, is it possible to somehow allow homeowners with rental space, such as a basement suite, house tenants that receive a rent subsidy, like Housing First, except for more moderate income individuals or families? You know, one thing I'll say about that is it's a very interesting time to be in affordable housing. I think, you know, the province with some of their most recent communication has really indicated a perspective that they want to do things a little bit differently, and you know, independent of what they do with existing stock or how they build new ones. There's a variety of different rental subsidies that are in existence throughout there. You know, to the extent that there's a program somewhere that enables something that you said, truthfully, I'm not aware of it at this point in time, and what the challenges or barriers would be. But I think, this is a great question, just pointing to the value in thinking a bit differently at a point in time. And I think we're blessed to have a city council now too, just recently joined here in Edmonton, that's, I think, thinking very creatively and wants to see greater affordability in Edmonton. So lots of opportunity to rethink what that is. I think I'd say from my perspective, we believe wholeheartedly there's a lot of value in managing, larger scale stock. Stock sounds just too heavy. I think we're creating communities for people to live in. And that's value unto itself when you can bring people together, have a community around you that allow you to advance and be successful. And that's the type of environment that we believe people will thrive in, and trying to find creative ways to do that, be it mixed income or just purely affordable housing.
Yeah, and I'll add to that, Nick, that I'm not sure if the city is still running the program, but in the past, they provided capital grants to support secondary suites that would be rented at below market rates.
When you talk about project viability, what's the time frame that you're looking at? Can a building be fully paid off in the course of 25 years, or is it usually longer?
Typically longer, and that's true of for-profit and not-for-profit projects. We're typically targeting about a 40-year horizon based on amortizations available with a CMHC mortgage. And it's a reflection of how expensive it is to build new construction right now.
Yeah, I think one thing that we're exploring as we look at new development, whether it's in partnership with private developers, others, over the horizon of an investment, can we increase affordability over time, wherein you pay off some degree of a loan? Does that afford greater income that can be reinvested in subsidization, or is that better suited to be then returned into the broader pot that can be reinvested in the next development? So, I think it really is an opportunity to think long-term and short-term when it comes to these things, and try and be as creative as possible with those common goals of enhancing affordability in the city. We've got just the last couple of minutes here, and certainly welcome any additional questions. I'm going to keep scanning through, see if any come in. I did see note that with respect to some of those accessible units, looks like there's some apps in development that prospectively connect folks to that. So it's great to see, again, the sector working together and trying to identify those opportunities for people who need it. And I think that's really all we're flexible and creative and work together. We can really start moving the needle here. Are there grants programs available to nonprofits that aren't available to for-profit builders? Jonathan, you sweat these every day, so you're a good one to answer.
Yeah, CMHC is a fantastic example. CMHC has preferred rates and forgivable loans that act as an operating grant for nonprofit builders. So CMHC does lend to for-profit for creating new rental units in Canada. But when nonprofits apply, they have access to better rates, so lower rates, and they also have access to forgivable loans, which provide an operating grant over the first 10 years of the project.
Yeah, and I think what we're seeing is, the city in its own right being quite flexible in how they're looking at various different grant programs. I think they enable largely non-for-profit entities to be the ones to receive those. So that's certainly welcome, and part of the value proposition, that all of us can leverage within partnerships, presuming that you can have a private-public partnership and still receive those types of grants. So good food for thought for those who are making those decisions, I guess, from a grant enablement standpoint. We don't want to set the sector back and limiting our creativity when it comes to maybe innovative partnerships with the private sector. I think everything's got to be on the table here as we look to try and advance affordability in the city. Oh, there's a good one. Any new projects in the works that you can share details about? And give us a week. And I'd love to spill the beans on some of this stuff. But
ask me again in January. I've got 4 acquisitions, 2 that are preserving affordable rental, worth about $3 million between the 2 of them, and then 2 new sites we're in the process of acquiring or hoping to acquire in that same time frame for new development. So we're busy, we're active, but yeah, ask us again in the new year.
Yeah, part of our intent, and it goes to the wonderful work so many of you are doing in the city. I think there's a lot of great things to be talking about within our sector right now, and we're going to try and be a little louder in our own right and really championing some of the great work that's being done, whether it's the projects that we're involved with and certainly those that we're seeing out in the marketplace. So certainly check myhomeed.ca going forward, and we'll try and keep that updated, as well as lots of other channels. Homeward Trust does great work, as does the city, to communicate some of these big wins within the community here. Let's go maybe one more question before we had a flurry here right at the end. John, I'm not sure if you're in a position to answer. What is the view from CMHC on providing funding Alberta's need for lodge housing?
I'm not the best person to answer that question, but if you want to reach out to me, I'd be happy to connect you with someone at CMHC who could.
Yeah. And I guess with that, just because we're last minute before we cut out here, I do want to acknowledge that we've got 2 more great presentations as part of YEG Housing Month that are going to tie into next week, GF Seniors Housing. So that might be the one to talk about some of the lodge housing questions and ask them. And then on Tuesday, Youth Emergency Shelter Society, yes, is going to be running a great presentation. Check those out at housingmonth.ca. But really want to thank you all for participating today, for giving us the time to talk about this, and our hope, certainly going forward, we can all collaborate together and really help advance affordable housing in this great city. So thank you all, and take care, be safe.
Thanks, everybody.